There's only one thing standing in the way between you and becoming a successful trader. And it's not strategy, it's not indicators, it's how you accept losses, right? Accepting losses gracefully. How do you respond to them? So in this video, I'm going to show you a simple way how to accept losses better so you don't trade on tilt, you don't revenge trade, and you don't over leverage, but you can accept losses for what they are. And I'm going to do this by explaining the difference between a probability-based loss and a possibility-based loss, right? And once I explain the two, it should change the way that you view losses and how you trade. So let's get into it. What's the difference between a probability-based loss and a possibility-based loss? A probability-based loss is when you execute your system and you meet your criteria and it still ended up being a loss due to the fact that no setup, no systematic edge is 100% guaranteed. Now, a possibility-based loss is when you deviate from your strategy based on the little signals or the small little confluences that didn't add up that the market is giving you. And you say, oh, it can possibly do this. Or if I catch this move and it does this, I could possibly make this much, right? So you're looking at the possibility of things instead of executing your system and relying on the probabilities of your system. That's the difference. Now I'm going to show you guys an example of a probability-based loss versus a possibility-based loss on the charts by using my own personal trades. Every day I annotate my charts, marking out step by step of my system on the charts, and it's always best to do this while you're trading. One, it'll slow you down. Two, it'll make sure that you're going step by step and you actually execute your system. And three, it will identify high quality, high probability setups if you're actually able to draw on the charts as your system is forming during your trading session. So let's get into it. So as you can see here on the left side of the chart, you see that I have my opening range. My thesis or my setup is the same thing pretty much every day. I'll do an opening range on the 2-minute chart, wait for a breakout. And if this opening range breakout is really a fake out and we return, price returns back into the range, I will take the opposite direction. In this case, it will be a long. I'll set my stop loss at the bottom of the fake out or the sweep, and then I will go for a higher day. So as you can see, we broke out, we got the fake out, the liquidity sweep, got back in the range, went for a higher day, and this trade was an obvious winner, right? So I executed my trade flawlessly here. This was a probability-based win. Now let's look at the same setup, but see if it was a probability or possibility-based loss. So as we're looking at this next trade, opening range on the 2-minute, we break out, right? Got some displacement, came back into the range. I entered short for low a day. It came back, stopped me out at high a day. And that was the trade, right? They're almost identical. And because I mark up my charts are the same system, the same execution, and one of the trades were a loser and the other trade was a winner doing the exact same thing, that's how you know it's a probability-based loss and it was not your fault. Us as traders, we have a habit of blaming ourselves every single time we take a loss, but you have to understand that it's not always your fault. Now, the possibility-based loss, yes, that's your fault. That's something that you need to journal, correct, and, make daily trading goals to make sure that you're back on pace, right, with your execution. But if you're executing perfectly, do not go back and try to figure out why you lost and try to go down this analysis paralysis and add different confluences. So next time you win, just allow the loss to be and keep trading your system that you know is profitable. And if you don't know that your system is profitable, go ahead and go on TradeZella or TradingView and backtest your system 1,000 times. I have a shit ton of videos talking about the importance of backtesting. It gives you the confidence, it improves your execution, and it lets you know that you have a profitable system so you can gain that trust with your system and understand that not every loss is your fault, and you can tell the difference between a probability-based loss and a possibility-based loss. So let's look at another trade where it was a possibility-based loss on my end, where I didn't execute my system to its full potential. I was looking at the possibility of how much money I could have made, so I disrespected my system and jumped in too early, or it could be too late, but I was looking at the possibilities of things happening instead of just going off of my system and relying on the probabilities of my system. So if we look at this trade right here, we got the sweep of the London high. My plan here is a sweep of the London high, wait for my entry model, enter once my entry model is signaled, set my stop loss at the end of the sweep and then go for a 2R profit target. But as you can see here, we swept the highs. We started consolidating. This is not my entry model. I normally wait for 2 pullbacks or 2 legs for a continuation into that direction. There were no 2 legs. There were no 2 pullbacks. Just this little consolidation, not much information here. And then I entered on the break for shorts. We turned around, stopped me out immediately. So this is an incomplete setup. I just jumped in here. This was an impulsive trade because I'm like, well, the sweep is here. If I can catch it early, this will be a big move and I'll make a shit ton of money. And I didn't respect my setup or my system. So let me give you one more example of a probability-based loss. So we got the sweep of London high. We got this divergence right there. And then I went short on the break, turned around, stopped me out immediately when my stop loss was at the high of this divergence, right? Or at the end of this divergence. Now, if I go to a similar setup, so if you can see this setup, I didn't mark the divergence, but there was a high right here, a high right there. That was my stop loss. Here's the divergence right there. If I would have entered going back into the range, price never touched my stop loss. And then we went all the way down where I took profits. It was pretty much the exact same setup, right? Going back to the similar setup, we have a high right there and we have a high right there. We went back into the range. I went short, got stopped out immediately. Coming back to the same setup, high right there, high right there. Got back into the range, went short, did not get stopped out, and it tanked and I took profit. It was the exact same setup, exact same execution, just a different day in the random distribution between wins and losses that every profitable system will give you. So now that you guys understand the difference between a probability-based loss and a possibility-based loss on the charts, I want to go a little bit deeper and take a quick moment to understand the psychological implications of this, right? So the reason why it's good to know the difference between a probability-based loss and a possibility-based loss is because if you know that this was just a random distribution between wins or losses and you executed perfectly and there was nothing else that you could have done, you will not go back into redemption mode and try to revenge trade and feel like you made a mistake and try to make that money back, right? If you know that this wasn't your fault and this was the market doing what it normally does, or your system just didn't pan out this time, you're not going to feel like you made a mistake and have to go into redemption mode and start revenge trading, over leveraging to try to make that money back so you can fix what you think you fucked up when you never fucked up in the first place. So that's why it's so important to know the difference between these two. And even if it's a possibility-based loss, I wouldn't say that's okay to go into redemption mode and start revenge trading. I would just say that know that you fucked up, know that you're off your game today, and just come back and try again tomorrow. Take a break. You're just not on it today, and that's completely fine. Everybody have their bad days. So I hope this video helped you out, and I'll see you on the next one.